Hey everyone, it's Rose and Helen here with Intera Real Estate. Today I have the pleasure to have Julie Baxter with Prosperity Mortgage here with us to kind of give us this year-end wrap-up of 2022. Hi Julie, how are you?
Good morning, Rosa.
So there's been news about Fannie Mae and Freddie Mac having to raise the conforming loan amount. Can you talk to us a little bit about that? How does that impact the purchasing powers for buyers today?
As the prices of home and the real estate market has appreciated over time, so has this maximum loan limit allowed. What that means, let's say you're in Santa Clara County, San Mateo County, you want to buy a home for like $748,000. You can come in with a maximum 3% down payment. So 3% down payment on a loan to $726,200 means you could get in with about $22,400 down payment. So that's a big deal, right? You can buy a home with only $22,000 down payment. And then because we're a high balance area, there's another loan limit that got increased from $970,000 to $1,089,300. It goes up as a percentage, so the numbers aren't just real flat. And these high balance loans still allow you to come in with a minimum 5% down payment. So let's say you could buy $1.1 million home, $55,000 down payment, and still fall under the more simpler underwriting guidelines that allow a payment to represent a much higher percentage of your gross income. So it makes a difference because you can buy more and still work with these much lower minimum down payments. Because if you borrow over $1,089,000 on a loan amount, that's considered a jumbo, and jumbo lenders typically want you to put 20% down, although there are jumbo lenders out there in the market that will allow you to come in with 10%. So it means you can buy more with these limited down payments, and that's a pretty big deal in this market.
Are you seeing that there are buyers taking advantage of a lower down payment and able to get into the market?
I am seeing quite a few buyers now coming in the lower range, first-time buyers, because they had a limited down payment. The interest rates, yes, they did increase this year. We're probably at about a 6.5% on these loans with a minimum down payment, but you can always buy the interest rate down with discount points and get a lower interest rate.
So that leads me to the next question. What are we seeing in the past month as far as real estate activities?
Right. I mean, I would have to say that this year it's more of a normal holiday end of year market. So we're back to what we usually see this time of year, which is a slower market. And interest rates have fallen 0.75% just in the last 4 weeks, which is the largest drop since 2008 in such a short period of time. So we are seeing the market get better. I mean, if you look back at from 2019 to now, we're up a 26% appreciation in the market. So real estate is still great to buy. What I'm seeing now, as you said, people are still buying. Sellers are much more willing to negotiate on a sales price, look at offers. They're providing seller credits, which are perfect, meaning the seller will sell you a house at a certain price, and they might give you $10,000, $12,000 towards your closing costs. So they're willing to pay your closing costs, or in some cases, even willing to give you money as a buyer so you can buy your interest rate down. So we're seeing that. We're seeing sellers accepting contingent offers. Contingent offers are those offers where you have to sell your house first and it's not yet sold, so you don't have the cash in hand. Mm-hmm. So we're seeing the sellers it's more of a buyer's market.
What are some things you're hearing about interest rates for next year? I think we're all kind of dying to see what 2023 has for us. Are you hearing anything, seeing any trends?
The mortgage rates tend to mimic the movement of US Treasuries. So even though we see and expect the Feds to raise the interest rates today, we've actually seen mortgage rates drop in the last 4 weeks. Prime lending rate will probably go up another half. It probably will continue to increase, maybe stable out by March of 2023. I don't think any experts are expecting that the Feds are all of a sudden going to be able to turn around and start lowering interest rates. Most people are saying that if we drive down demand for products, then that's going to lower inflation. That is the goal of the Feds. So we can't really speculate on what's going to happen. There shouldn't be a dramatic reversal by the Feds to, reverse course and lower rates. And most experts are saying we will narrowly miss going into a recession. So when are rates going to drop again? There's really no one knows for sure. Is there a thought that they could drop a bit latter part of 2023, perhaps? The goal again is buy now, and if you see a lower rate anytime next year or 2024, you can always refinance at no points, no fees.
We need to take advantage of the market conditions now where it's less competitive for buyers to get in. And I think the sellers who are selling now are motivated to sell. And I think the expectations have also come down from sellers. Yeah, well, thank you so much, Julie, for being here with me today. Thank you for your insight. Totally appreciate this talk with you. It's always fun to hear your thoughts about the market and what you're experiencing in the real estate world as well. So thank you, Julie.
Okay, and happy holidays to
Happy
everyone.
holidays.